Good morning, everybody, and welcome back to Sugar Mama's Fireplay podcast. I am financial planner Canna Campbell. I'm here to help you with all of your goals and dreams at any time of the day, whatever path you decide to pick. I want to help you achieve those financial goals and dreams in an efficient way, a smart way, an educated way, but also with a great sense of balance and overall well-being. Now, whenever I hear a debt-free story, I always get so inspired and so motivated to work on my own financial goals. But please know that this is not a competition to see who can pay off the most or who can do it the fastest. It's just simply about sharing with you motivation and inspiration so that you can, stay on course, go the distance. And if you're ever feeling like you're a bit lost, overwhelmed, or feel like throwing the towel in, by listening to the people's stories and how they push through and what insights and things they discovered along the way and the personal growth along the way, that it helps you in some capacity either get out of debt or continue on building your own wealth. Now, a quick reminder to please refer to my general advice warning, because none of my advice is ever personal advice. However, I think you guys know that already. Now, this morning we are chatting with the finance witch, Clara. Now, Clara has amazingly, it was actually her Instagram account, which I've been following for a while. It caught me off guard. She has managed to pay just over $195,000 off her home loan in less than 2 years. She is going to share with you all the hacks and the habits and the steps that she followed to make this happen so that she could see the progress and feel good about taking control of her financial future. And I'm also going to share with you some very, very helpful tools along the way in this podcast. So if you haven't already, make sure you're subscribed to this channel. And of course, you're listening to us every Monday morning. Clara, thank you so much for coming on and sharing with us your debt-free journey and story. Can you tell me a little bit about yourself, where you live, your family situation, what you do for work?
Yeah, well, thanks so much for having me, Canna. I'm actually not too far from you, located in the Hunter Valley in New South Wales.
Beautiful.
So both my husband and I, we have our own company doing structural landscaping, building sandstone retaining walls. So there is quite a lot of flexibility there with our finances. But being self-employed, we are regularly considered as being high risk.
Yeah. That's one of the beauties of being high risk, is that you have so much creative control over your destiny. You can, to a certain degree, choose when you want to work, and you can set your own goals. You're not controlled by a boss or a manager. But then there's no annual leave. There's no sick leave. Public holidays don't really exist when you work for yourself. And of course, when it comes to borrowing money, the banks are always, there's a few extra hoops of fire that you've got to jump through to get finance approved, which is fair enough, but also frustrating at the same time.
Yeah, it is. And I mean, it's not always guaranteed, our wage. And when you say that you're a business owner, people assume that you're on this really awesome wage. But I mean, it was only a short few years ago that we're on a combined income of about 45 grand a year. So when you compare it like that, we are growing lots and lots. And I think the key to it is that we just had such small daily expenses. And when the lifestyle creeps happened, we have kept our budget still so small. But yeah, in regards to getting a home loan, it was a really big mission. I think having a good relationship with my broker definitely made the process a lot easier.
Yeah. Well, look, we'll come to all of your hacks and how you did it. But I want to make you aware. I know you said to me in your email you've paid $195,000 off your home loan in less than 2 years, but I ran some very, very conservative numbers using the free calculators on the Sugar Mama website. And I simply went to the extra repayments calculator, which allows you to see what the impact is of lump sum repayments as well as increasing your minimum repayments. And I just plugged a few things in because I know you started with a mortgage of around $615,000. You took out a 30-year loan. I plugged in an average interest rate of 4%, so for an average of 4% over the 30-year term. So obviously at the moment you're probably paying a lot lower than that, but over the course of 30 years it's quite possibly going to be closer to 40 if we have a few interest rate rises. And I worked out if you put on average an extra $20,000 a year in your repayments using 4%, and I know that you have some fantastic side hustles that you're about to share with us, that alone has saved you $246,075 in interest over the life of your loan. And this means also if you continue to at the progress you're going, or even just a minimum of $20,000 a year extra, assuming that $615,000 mortgage, you will have paid your home loan off in half the time. So it's not a 30-year loan. You're on track to have it paid off within, if not less, 15 years. So not only have you paid off $195,000, you've saved yourself well in excess of $246,000 interest and saved yourself 15 years off your life.
Wow. It's crazy when you put it like that, and thank you for working it all out. And I think part of my Instagram account was, the accountability and inspiring other people that your money doesn't need to go back in the man's pocket. Do you know what I mean? You can take control of your own finances, and a little bit of hard work now can really put you in such a better place in the future, even for you and your children. Absolutely. It's amazing the difference.
And I can't stress the importance of putting extra money when you can afford it. Take control of that lifestyle creep, because I know myself, my friends went on lots of trips overseas, and I think traveling is an amazing investment in themselves, but I didn't always have the latest, dress or, the extra pair of shoes, because I value being able to put extra money towards my mortgage. And I now look at myself, I've now got 3 children, and I'm like, thank goodness I did that now, because it's taken so much pressure and stress off me today. That does not mean I'm swimming in cash and, zero mortgage or anything like that, but it's allowed me to have more choice and flexibility and control, because I did put those extra payments on earlier in my, wealth creation life and in my debt-free life as well. So it really does pay off, because when you have children, you've got 2.5-year-old twins, and kids are expensive, and you want to be able to afford those things that you previously may have not had to pay for.
Yeah, and I think that's a big drive. I think paying off such a big loan, it's like watching the grass grow. Do you know what I mean? So it really is important that you find out your why as to why you want to achieve this. And that brings me to my point of my why is for my kids, so we can create this safe and secure environment so that anything does happen, we are secure and we are ready, and we have opportunities to offer them as well.
Absolutely. And you know what? Life's too short to be worried about money and stressing about money. It can be, when not used in the right way, a very, toxic supply in your life. When you talk about money in a positive way and use it as a tool to help you, for more positive things and to help your community and to bring greater health and, resources for everyone around you, it's quite mind-blowing what you can achieve when you shine a light on it, and the brightness that then flows into other areas of your life. Now, look, $195,000 to pay off your home loan in less than 2 years is an incredible achievement. And especially, as you said, like high risk, self-employed, running your own small business. You've had twins as well, so you would have started when they would have been 6 months old or younger. Like, what have been the things that you did that have helped make this happen? Because everyone's listening to this thinking, all right, what has she done? Like, and what helped the most? Like, what can I take from this and apply in my life?
Well, to be completely honest, I think the base course is definitely your mindset. Like, if you wake up every day and you just say, yep, I'm going to pay my home loan off early, and those tiny, consistent steps each and every week, it counts. It might, like I said, feel like it's watching the grass grow, but it does. It all adds up. And I think creating my Instagram account, The Finance Witch, and the Australian Debt-Free Community on Facebook, it's a space where like-minded people are together. They share their own tips. It might be just reducing daily expenses, their inspiring stories. It just surrounds you. And it's like, if you want to try and build a better habit, you need to surround yourself with those types of people, and naturally you'll just become better at that habit.
Absolutely. I've started with my goals for 2022. One thing I'm doing slightly differently, and it's an old hack that I used to use in the past, and that was to do one thing for each of my goals each day. So, for example, if I had a goal around paying off my mortgage, which is one of my goals, even if I can only put $1 on that mortgage, at least one day, that habit of doing something, no matter how big or how small, to help take me one step closer to achieving that goal. And it's incredible. It all adds up. And, people sort of like turn their nose up at like an extra $10 here or $5 there. But when you jump on the Sugar Mama website and plug your mortgage into it and see, for example, what $10 a day does on your home loan, or, $5 a day, it really does make you think about where you're spending your money and the value and the uplift you can add to your life very, very easily.
Yeah, I agree. And I think it was only your post just the other day. You've got the same gratitude for putting $10 towards, your goals as what you do $1,000. And I think having that excitement for $10 and $1,000 is really important. Do you know what I mean? Because that way you know that you're going to be in it for the long run. So, yeah.
It's a law. I've forgotten what the law is, and I'm hoping someone will listen to this and message me and go, hey, Canna, I heard what you're talking about. It's called the law of such and such. But essentially it's the law where the universe can't tell the difference between $10 and $10,000. So you just you act the same way, and and then what you appreciate appreciates. And then Oprah is famous for saying that. But I really do believe it. Like, I get just as excited about, a $10 voucher, or as say like $1,000 opportunity, or a $500 opportunity to declutter something. All right, what are the practical steps and hacks that you did? Like, did you sell things? Did you come up with a side hustle? Like, did you have a budget? Like, what were the tools that you used to achieve this? I'm really impressed. And I have seen so many different financial situations of all different walks of life, and this definitely stands out to me.
Thank you so much. Well, full disclosure, I don't really like budgeting. So I try to do that the least amount of time that I can. So I basically just do a monthly budget, and that's based off what our estimated wages will be, which are pretty spot on anyway at the moment, thankfully. And I write down all of my expenses and my goals, and I just review them monthly, and I find that's enough for us. And we have a rewards chart. So I should say the goals tracker first. So when we're going through the budget, we've got our goal tracker for, say, colouring a square for every $500, and by the end of the year, it's a beautifully coloured in house kind of thing.
I love that. Adelaide.
Visually, you've got it up on the vision board, and you can visually see your goals coming to life rather than it all just being, on your phone in a banking app. I think it works better for us in that way.
It's good for the family as well to colour it in and see it all, because it's welcoming the subject of money in a very healthy, productive, constructive way. For your girls to colour it in and help be part of it and understand that delayed gratification. And I think you're planting like, for some people listening to them, I think, oh, hang on, what's a 2.5-year-old going to know about a mortgage? But I think people really underestimate what your kids will be learning. And I even get financial tips from Rocco now. Yeah,
no, they love it. And they love the piggy bank with the loose coins. And when it gets full, we take it to the bank and cash it in for their bank account. So that's something that they love to do.
So you've got a chart and then a mortgage chart, is that right?
So I just track our how much money per month we put towards our mortgage, but we have a rewards chart. So we do splurge money in our budget once a week. About $90 I find is sufficient for us to spend on things like takeaway. You know what I mean? There's the bits and bobs of fun things that you want to do. But for the bigger things that are over that $90, we put on a rewards chart. So say, for example, your goal is to pay off $100,000. So when you get down to, say, $190,000, you can spend, $150 on a shopping spree.
Yeah.
Do you know what I mean? Or then, like, when you get down to $150,000, you can go on a weekend away with your family. And that kind of thing keeps you motivated to keep going forward.
Well, it keeps you empowered, because you're reminded is that this is up to you. If you want this, this is the sacrifices, and you can work out whether it's worth it or not. Like, it really gives you the opportunity to step up to the plate, which is, I think, always really exciting, no matter what goal you're trying to achieve. What about like side hustles? Like you mentioned to me over email that you've earned almost $20,000 from a side hustle. Like, what are these side hustles?
Yeah, okay. So the side hustles are decluttering and selling things, surveys, just bits and pieces around the house, like return and earn can recycling, Woolworths rewards, like the rewards programs.
Great, yeah.
I can't the cashback rewards, like so the difference that you would save, then I put that difference on the home loan kind of thing. Yeah, and it all just really adds up because it's, I do it all the time.
Exactly. And the thing is there, and this is what, if people listening to this right now, you might think, okay, whoop-de-doo, I saved $10 by using my Woolworths rewards. That, if you proactively transfer that $10, it really counts as savings. If you don't proactively transfer it, the moment you save it or earn it, it will evaporate. That money will be spent on something else. And I guarantee 9 times out of 10, when you spend that money on something else, you won't remember what that else thing was. So the moment that money hits your account, as you've been doing, you transfer it to your mortgage. For me, I transfer it to the $1,000 project account. You must do that. Otherwise, as I say, it will get spent somewhere else. It won't really be a true saving. But you're a testament to how much it quickly adds up, like $20,000. Wow. It's a holiday, a really good holiday overseas for a family.
Yeah, well, I have to confess that unfortunately I lost my stepdad in March this year. So I did actually inherit a few items that I wasn't going to be using, but it was under $5,000 worth of stuff there that I on-sold. But that definitely helped contribute. And I think it's nice to think that he's contributed to our home loan as well.
Yeah. So for all those people going, oh, hang on, you inherited something. No, let's bring it back down to earth. It was, as you say, $5,000 worth of stuff. What about your mortgage? Tell me about this. Like you touched on a mortgage broker, and I'm a big fan of this as well, having a great relationship with a really good mortgage broker. If anyone wants a mortgage broker recommendation, I'm more than happy for you, Clara, to share your mortgage broker, and I'm happy to share mine. And I don't get any referrals or commissions or anything like this. It's so completely on transparency. I'm just happy to share good contacts for when someone needs help. But having a great relationship, this is what I've always done. My mortgage broker is on speed dial in my phone. And I have a feeling you do something very similar as well.
Yeah, I do. So running a business, so we have our structural landscaping business, and she helps us with all of our asset finance. She helps us with our home loan. I've recommended my parents, my friends. She's a small business, and she's a one-man show, but you can tell the difference, I think. Do you know what I mean? She's really passionate about what she does, which I really appreciate that. But she's actually lined up our mortgage with, I guess you would call it a good credit review program. So once every 12 months they review, and if you meet your monthly repayments or make more like us, then they will consider reducing your interest rate. So that not all banks do that, but I was just lucky enough that she done our mortgage through that particular bank, and we can take advantage of that.
So for the listeners, it's essentially a rewards program where you get rewarded and incentivized to pay off your home loan as quickly as possible. So, and the reason why is your loan to value ratio, as you make these extra payments, comes down, and hopefully you've had some growth on that property as well, depending on the markets. Essentially, you are less risk to the financial institution that's provided you with your loan. So therefore, they reward you by reducing the home loan, which makes it even easier to pay off your home loan even faster, particularly when you can maintain or even potentially increase your mortgage repayments continuously. So it's a great product, and it really does encourage wise, sensible, proactive, and responsible money management, because it is a massive help in making significant dents in reducing your mortgage. And so for the listeners out there, like reach out to myself or Clara, and I will obviously link Clara's Instagram account so that everyone can join the community, your growing community, and chat about these strategies. And having, I think, as you were saying, a proactive mortgage broker that knows, there's a new product that's just come out. I think we need to look at refinancing, and that mortgage broker is so aware of your financial goals and wanting to pay off your home loan. They know not to, for example, put you on another 30-year loan term, but to say, okay, well, you were 5 years into that one. Let's put you on a 25-year loan term so that we're not messing up your cash flow and giving you a false sense of security with a interest rate saving. Like, try and maintain that minimum one. All right, let's talk about pay rises, because you mentioned that at the beginning of our conversation. How have you used pay rises to your financial advantage, but also, obviously respecting the financial well-being of your whole family?
Yeah, okay. So I guess because we're a relatively new business that started in 2016, only as part-time, and then we were lucky enough to leave our very secure jobs, well-paying jobs in the mines. Both of us were in the mines. So that was a big leap of faith. And thankfully, a few years later, it's now paid off. But yeah, I think From a business point of view, it's very important to have a very good accountant so they can tell you, what you can legally claim and what you can't. So you get an idea of my expenses, things like internet, phone, fuel, the business pays for those types of things. So just for those at home, not to compare themselves to me, because being a business owner, the tax structure is completely different. So, we're thankful that we've got a really good accountant that's on speed dial, like my broker, very regularly.
When you are self-employed running your own businesses, of course, you can put expenses through that, you are able to use, I guess, more tools and strategies available for you when you're self-employed. And the backbone of this country is self-employed small businesses. So obviously it's in our government's incentive, it's in our incentives to make the most of those tax concessions and loopholes and rulings and so forth. So having a great relationship with your accountant is definitely very, very valuable. And quite often people can I've spoken to in the past, they've turned their side hustles actually into legitimate businesses that have gone from strength to strength. So when you guys, obviously the business started up, your first couple of years would have been tight and quite stressful. When you got those pay rises, how did you account for them and how did you benefit your financial well-being with those pay rises?
Yeah, so we just basically... We moved when we first left to work for ourselves full time. So buying a new house, and we were already stretched to the limit with our budget. So a couple of years fast forwarding, and we've got a decent wage, and we're pregnant with twins. We've just had the twins, and it's time to get a bigger house. So I guess you could say, yes, we did have a bit of lifestyle creep because we did move somewhere where we could keep all of our children, now that we've all of a sudden space. And two, all of our trucks and machines, because we have lots of trucks and machines, and we were parking them on the street essentially with our old house. So that's how we spent our money on our new house. And houses are expensive in Australia today.
Oh God, it really worries me. And did you increase your mortgage repayments as well with that pay rise? Is that how you've done it in the past, or have you gone, okay, well, look, we'll take 50% of the pay rise for a healthy life and allowed lifestyle creep, and put the other half on the extra mortgage repayments? Like, how do you find that balance?
So really, when we would reduce our interest rates down and down, because I think when we first started, it was about 4.2 or something crazy like that, because we're self-employed. It's just a whole different scenario. We don't get offered the same interest rates that regular people do. And I think by the end of it now, we're at about, I feel like 3.2, which isn't bad.
Yeah, that's
pretty general. When those interest rates go down, I would just keep the repayment as the same. Do you know what I mean? So technically I would be paying extra each week, but it was the same as what we originally started the loan with. So we didn't really realise.
Yeah. And I have got multiple videos on YouTube giving that advice to so many people, saying, don't use the interest rate cuts as an excuse to go and spend money, even though our government wants us to do that to stimulate growth. Use this as, make hay whilst the sun shines to make a massive dent in your mortgage. And, I also recommend people make extra payments on their home loan anyway, because when interest rates eventually start going up again, hopefully not immediately, but, we need to be realistic. When those interest rate rises do come, it doesn't actually change your budget or your cash flow, because you're always paying in excess of the minimum repayment anyway. So it's not going to be too damaging. Yes, it does slow down the process of paying off your home loan quite as quickly, and you don't save as much time, but you're so glad that you've always done a disciplined amount of in excess of. I guess it's like so many people just follow the prescription the banks give them. They say, oh, here's your 30-year term and you need to pay, $2,500 per month. And they just take that, they accept it, and they don't ever think to pay extra. But these are the people I really worry about, because their budgets will be dramatically impacted with interest rate rises.
Yeah, it's so crazy too, just to think, about how normalised it is to have a 30-year term loan, and it's like you have to work for 30 years to pay that back. And, everyone knows what life's like. It's so crazy. It doesn't go to plan. Imagine all of the little hiccups that happen in between. Yeah, you can afford the repayments, but what happens if one of you loses a job? What happens if somebody gets sick? I just think part of the reason that I wanted to was to one, will have more time for my family, two, give them good opportunities, and three, inspire others, because I just love how millennials are really taking a love for personal finance. It's really motivating, but just so cool. Putting the money back in your own pocket.
Absolutely. And if you jump on the Sugar Mama website and play around with these lump sum and extra payment calculators, which are free, they're there as a tool to help inspire you and motivate you to keep going with your debt-free journey. It is quite incredible the impact of $10 a day or an extra $200 per month on your mortgage repayments as to how much time and how much money you save. And I said this on I think it was a YouTube video or a podcast with a mortgage broker. I was saying so many people will break their back to save, $5 there or $2 there. But really the biggest savings is quite often right under your nose. And look, as I worked out for you and this is a conservative number I've run by using my own calculators, you've saved at least $246,000 in interest, with that extra $400 per week repayment on your home loan, which is what you have been doing and are doing, and actually you've been doing more of. The final question that I wanted to ask you, and I find this subject so fascinating, is the golden handcuffs. You and your husband came from a mining background, which we all know is very, very taxing on the body. A lot of people do fly in, fly out, 5 days on, 1 day off, or 10 days on, 2 days off. It's great money, but it's not sustainable, but it almost can lure you into a very dangerous zone where you become really, I guess, adjusted and comfortable in the new lifestyle. Did that impact you, or did you witness that around you? And if so, where are those people today in comparison to where you are? And how did you, I guess, stay true to yourself?
Yeah, well, I think just so people know, I only really completed my traineeship, and then once that was completed, then we decided to leave. My husband, on the other hand, he was in the mines for about 8 years. So by the end of it, it just takes such a strain on your body. I remember when we finished, our neighbours were like, wow, you guys don't look like zombies anymore. Do you know what I mean? It's definitely it's a zombie lifestyle job. I think you miss out on so much on the weekends, sacrifice. But then again, in saying that, I really love operating machinery. I think it's great, and so does my husband. That's why we run our own business. So I understand why people do it. And if you get on a good crew, it's really welcoming, and it's a great atmosphere. But you're still working for the man, and you're still doing big hours, and you're missing out on a lot of other things. So that's why we chose to leave. But in comparison, it was completely normal to see people that were on 120 grand a year. So was their husband, and they were mortgaged up to their eyeballs, couldn't have a sick day because they needed their money to pay for these repayments. It's like the lifestyle creep. That's the perfect example. You can see these people on some of the biggest wages, and they're still mortgaged up to their eyeballs.
And what quality of life is that?
Yeah, it's a bit insane. It's actually quite sad, I guess, because, I don't know, I've heard you say previously, it's like if you can afford the repayments, you can afford the loan, and that's not the case at all. And I think it's really misleading when banks do that. But unfortunately, it's the world that we live in, and all that we can do is just give out free education to people so that they're just more aware.
Exactly. Well, look, Clara, thank you so much for sharing your story, being so open and transparent, sharing with your hacks. I love the idea of your visual goal trackers. So I think you share those on your Instagram account. Is that right?
Yeah, I've got a little Etsy store just called The Finance Switch, where I've got all different trackers for investments, home loan payoff, whether it's, trying to exercise, those types of things. But the link's all on my Instagram for that.
Okay, well, I will make sure I share all those links for everybody who is watching and listening as well, of course, because I really do think that visual aid is really inspiring and really motivating. And, you don't need to try and tackle your whole mortgage, but maybe you say, well, of our, say, $483,000 mortgage, let's try and knock $15,000 off. Don't tackle the whole 485, just break off little bits and try and dissect those little bits at a time, and then move on to the next little bit to dissect. It's that saying, how to eat an elephant, one bite at a time. And you'll be amazed when you just have a go, see what you can achieve, and it will, as progress fuels success, as I always say. Well, as I said, Clara, thank you so much for coming on and sharing your time on Sugar Mama's Fire Play podcast. As I said, all the links and accounts will be in the podcast description below. Everyone, thank you so much for listening. If you found this podcast helpful, inspiring, motivating, please make sure you share this with your family and friends. I love it when someone shares something on Instagram or Facebook and tags me, because I know that I'm able to reach and help as many people as possible. And we're all working together as a community. If you could stop and take a moment to make sure you are subscribed to my channel, and of course you leave a rating and a review, I would greatly appreciate it. And I'll see you on Thursday on my YouTube channel for more financial education, motivation, and inspiration. Ciao for now. I'm financial planner Clara Campbell.